I came across this meme online a few days ago that pretty much reflects how most people think about leverage. Nevertheless, leverage is a really good tool for trading that you don't have access to in every market, and that as Forex traders we are lucky to have because it can help us in different ways, and that's what we'll cover in this video today. As a quick reminder, if you haven't subscribed to my channel yet, hit the subscribe button below. I publish videos like this almost every single day. My goal is to bring you tips and support on a daily basis to reach your goals of trading full time and achieve more freedom in your life. Now, I want to do the best I can here for you, but you gotta show me you're serious by clicking the subscribe button with the bell next to it to be notified of future videos and not miss out on any of the things I publish in the future. Now, leverage is something I get questions about on a daily basis, and I think it's time that we clear the myths about it and that we kind of get clear on what it is, what it's not. Most people see this as either a way to grow their account really fast or to blow up their account, and that's not really true in practice. Of course you could do that, but there's other ways you can go about leverage. First though, let me explain a little bit what leverage is so we know exactly what to focus on and what to do here. Unlike popular belief, the leverage you set in your account doesn't affect your trade per se. It doesn't affect your P&L in that trade or how much you will win for that trade. That's only based on your lot size. What leverage does is it's allowing you to take more trades at the same time. So you have more margin in your account. You need less capital to trade, basically. If you want to buy $10,000 worth of currency, then you have to pay $10,000 with a 1-to-1 leverage. But if you want to buy $10,000 with a 50-to-1 leverage, then you have to pay only $200 to be able to get that amount of capital. And so that's where leverage makes a big difference, is that you can buy more with the money you have in your account. But it won't affect any single trade because your maximum loss there or your maximum profit is determined on your lot size, so the size of your trade, plus times the pips that you risk or that you aim to win on that trade. And so that's the biggest determinant there. So it's not going to blow up your account right away if you change it to a bigger amount, the leverage, but it's going to blow up your account if you take too many big trades or go for like big stop loss with big lot size. That's where it's going to screw up everything. I've done a video explaining exactly what leverage is in Forex, so I'll leave the link below if you want to check it out and watch this. I think it's a good one to kind of know the basics. More in depth than what we talk about here. But for now, let me know in the comment section how much leverage you use right now. Is it 1-to-1, which I doubt? Is it 50-to-1, 100-to-1, 500-to-1? They have some regulations coming up pretty soon to reduce leverage by quite a bit. But I'm curious to hear in the comment section what leverage you use right now. I personally use 30-to-1 most brokers that I have. I think with Pepperson I'm at 50-to-1 now, which they will bring back to lower pretty soon. But that is what I use right now. Now the question is, how much leverage do you need in your account to be able to trade well and not blow up your account, but still grow it quite well and still take the trades you want? Now the key here is taking the trades you want to trade. So there's this saying that you should risk only 1% per trade on most of your trades, and that is okay, that is fine. Now what you need to think about here is, let's see what you risk that per trade, or even less. How many trades do you have open on average, and what is the value of those trades? Now you want to make sure that the value of those trades together, all combined, that you take at the same time, add up to an amount that you can cover with your leverage versus what you have in your account. So for example, let's say you have a $10,000 account and you want to be able to take 10 trades at the same time open. Now these 10 trades, based on your stop loss and your lot size, equal each total value, not stop loss, $2,000. That means you would need to reach at least $20,000 to be able to take those trades all together at the same time. And for you to be able to do that, you would need to have a 2-to-1 leverage. So you need double your account size right now to be able to take all those trades. Now that's how you figure out your leverage. Now think about the fact that maybe your account is smaller, maybe it's bigger, that's totally fine. Calculate the total value of your trades and then figure out how much leverage, so what multiplier you need to be able to get there. Now the key here is you don't want to go to exactly what the amount there, because you might have some exceptions, things might happen, you might take more trades or so on. So give you some buffer. Let's say you have to trade $20,000 worth of currency on a $10,000 account. Then maybe what you do is you go to, instead of 2-to-1, you go to like 5 or 10-to-1 to have some buffer there. But leverage, like we said before, doesn't affect your profit per trade. It only affects it if you change your position size to a bigger amount on your trades. So that is the key here. So now let's talk about what if you want to be able to grow your small account. What do you do in that case? Well, you got two options, and I tell this to people all the time. So would you prefer to trade on your $10,000 account forever and make 30% off of that, which would be around $3,000 per month? Or would you prefer instead have a good track record for your account that gets you funding by investors and prop firms, and then get to a $300,000 account, so 300K, and then make even like 5% a month, right? That 5% would be $15,000, which is a lot more than your $3,000 in your small account, your 10K account. And so that's the point here. The goal is, if you are willing to do trading for the long term, not just a short-term game of quick profits, which I hope most of you guys are, then build a track record that's good with low risk, with small leverage, and then build that up so you can get financing later. and this will multiply your capital, and then you will be able to make a lot more profit on your trades. But this takes patience and time, but you will get there if you're serious about it. So that's the key. Don't increase your leverage, don't take bigger trades because you have a small account. Keep the exact same risk, a small risk, 1% per trade or less, and build that track record and build that small risk, good return trading account, and then get financing letter for that, and you'll be on your way to get really good results from it. So now we've covered leverage, and that's the big part of you being successful in trading. But if you want to get more out of trading and more out of your returns in your account and be able to live a life of freedom, travel the world like I do, and spend time doing whatever you love and make money on the side trading, then check out the case study I've linked below. It's a video I prepared teaching you some things that you might not know about yet that can make a big difference on your trading results and what you get out of trading, and also help you kind of find out the way to get to being profitable and making a lot of return, building up that account and scaling up eventually your trading over time. So check that out. It's gonna be really useful if you aspire to get more out of life and not being stuck in a job you don't like or doing things you don't want to do at all. So that's gonna be the first link in the description below. Also subscribe if it's not done yet. I publish a video like this almost every single day, and I'll catch you back here in the next video pretty soon. Ciao.